There has been a lot going on lately. There's been a lot of news coming out. We've been bombarded over the last few days with kind of the dollar setting the tone and everyone else following up. That's what kind of market condition we've been in for really the majority of the year, kind of a follow the leader. But we've had the dollar of that something maybe like bank or not. Now, the main thing I don't like about it is we're going to get weird candles on the chart. We already have weird candles on the chart. And whenever we get funky candles on the chart, it just means I've got to wait a certain amount of time until those things are cleaned up and we get back to normal price movement, right? That's all I want as a trader is normal price movement. Is that too much to ask? I don't want long wicks. I don't want indecisiveness. I don't want no movement at all. I just want a normal, natural ebb and flow. That way I can do what I do best. And Bank of Japan intervening kind of messes it up short term, excuse me, but I don't actually think it's going to make any difference long term. And you'll remember last week we had a nice conversation. I put it up on the weekend trading edge video as well. A nice conversation talking about supply and demand and how the market really works. Do you guys remember that the talk we had in here? We started off with falling knives, and then we talked kind of about institutions and retails and playing on our emotions, right? So this is one of those similar things, right? And when the Bank of Japan intervenes, right, and they threatened this, you'll remember what, like a month or so ago. When they intervene, it's more about the public perception than it is in the currency market, right? Or actually anything in the currency market. Like bigger picture doesn't really make that much of a difference, right? We're still in the same condition, right? Bank of Japan is going to keep low interest rates. The dollar is still going to aggressively hike and raise interest rates. Nothing has changed from a fundamental perspective. And, what I think we'll see is we'll see a little bit of consolidation, a little bit of fear. And then once our FOMC comes out next month and says whatever they say, we'll see continued motion in the normal direction. But the thing is that fear, because what they want to do is they want to slow down the dollar yen, right? We're on this rapid rise. I'll bring up a dollar yen chart so you guys can see. We're on this rapid rise and they want to slow it down. And again, it's kind of like a Band-Aid, right? The bigger picture to slow it down, you've got to do something monetary policy related. Yet they don't want to do that. So the next step is like, hey, let's come out. Let's say we're going to intervene. And what is the first thing you think when you hear when you hear Bank of Japan intervening or Minister of Finance, whoever is controlling it? What is the first thing you think? Are you fearful? Are you having flashbacks for you guys who were around during the Swiss crash? Are you saying, I don't really want to touch, or we should sell because they've got the bank, the backing of the bank? Right? That's what they're banking on. They're banking on retail traders being afraid to keep buying the dollar versus the yen because they don't want to be on the other side of it. And hopefully that will cause a slowdown in the rally, or at least some type of indecision, some type of consolidation. Because again, there's that fear of like, well, why would you go long if they're intervening to keep it short? So that's all it is. And I was talking to a few traders this morning about it, where it's, they've done this before, not officially, but they've come out and basically said, hey, we're going to devalue our currency, or we're going to do this, we're going to do that. So it's not the first time they've done it. And the last technical intervention was 1998, but they've done this before. So it's nothing that you need to overly fear. Again, the current candles in your chart, like this candle sucks, right? This long wick to the upside, long wick to the downside, close somewhere in the middle candle is going to stink because it's going to affect our analysis as far as the highs and lows that I need violated in order to make next predictions. That kind of stinks. But bigger picture, it's not as big of a deal as you may think. So I don't think you guys need to be fearful or anything like that. So I want to bring it up because that was a topic and no one's going to get questions on it. So I want to get it out the way first and foremost. Um, let's go to the trade of the day today, which is going to be on the dollar Swiss. And this is going to be an old school trade, right? Old school, straight back to 2012 Akil support and resistance trade, right? So I'm here on the dollar Swiss 4 hour, right? And we've got a big move, right? We've gone from 96.20s basically to about 98.40. So over 200 pips to the upside. Straight candles, a little bit of retracement, a little bit of relief, right? You can see with this first green candle, we came up, we got a wick to the upside. So we retraced a little bit. So we go down to a lower time frame. We're going to see a little bit of this action. But essentially, we can all agree, right? A high momentum move to the upside. Not going to be a bat. We're not going to hit a 50% retracement. I didn't actually measure it out, but I don't think we do. Yeah, not going to be bats. We don't hit a 50% retracement here. So not going to be a bat pattern. Close, though. Well, I guess depending on your rules. I know some people do require a 3D2. But we've got price action running up into a previous level of structure. Now, why I want to use the NinjaTrader charts today and show the VS1 levels, because this is very important. And again, this is mainly for traders that don't take the time to gain perspective. Yesterday, we had a good conversation about, or 2 days ago, the IPDE process: identify, predict, decide, execute. I'm a big fan of multi-time frame analysis. I don't really care what time frames you use, but I do believe that you should have a higher time frame to at least gain perspective, because there are a lot of things that we can't see. And if you initially just look at this 4-hour chart, and this is what a lot of traders do, they come in, they see this move, they want to shortcut the process, they don't actually have a process their analysis, and they see this first level of structure and they say, hey, look at that, these are the highs. Well, what I love about these VS1 levels is that, well, I see a blue box, and I forgot to change the color, so forgive me. I had a NinjaTrader crash, so I had a quick restart. Excuse me, but you see this big box above it, right? What does this mean? What is the fact that we have a smaller box here and then a bigger box above it? What does this give us a clue of? A very important clue, a potentially trade-saving clue. It tells us that, yeah, there's something else here, right? Look left, structure leaves clues. So it's just that little nudge like, hey, Akil, look to the left, see if there's another level that we forgot about. And oh, yeah, look at that. We've got this consolidation. We do have these recent highs right here at 98, basically 99 even, or a little bit below 99 even, sorry, 98.60s. But we have another high right here near 98.95s. And what's important about being aware of that? Does that affect our actual trade entry? Probably not. We're probably still looking at the same area. But where does it come into play? There's 3 parts of a trade we need to consider at all times, right? Entries, stops, and targets, right? This is going to cover our stop losses. And we've been having some good conversations lately about, I don't want to call it getting cute with stop losses, but finding that mesh point, right? The fine balance of trading. There's an art to a stop loss. And it's funny that can probably be a book or a course in its own right. There is a true art to a stop loss. We always talk about I use ATR as a multiplier. But we talk about giving yourself freedom to kind of put that stop in the best place, right? A stop loss is interesting, right? Because it needs to be far enough from your entry to give you what? It needs to be far enough from your entry to give you what? It can't be right above your entry, or it shouldn't be. Or who am I to tell you? I personally prefer that it's not right above my entry. It needs to be far enough away to give you what? Or to give the market what? Not risk reward. That's not the first thing we want to think about. That comes in, that's the result of everything, but we don't want to think about risk reward. Room. We need breathing room, right? How many times has the market come to your entry, reversed right away, and never went a pip above? Maybe like once or twice, right? Maybe like once or twice. Typically, it comes to your entry and it plays around, it goes up, it takes you into the red a little bit before it does whatever it needs to do. So we need to give it breathing room, right? So we don't want our stop loss right on top of our entry. On the other hand, do we want our stop loss miles away? What happens if we give the market too much breathing room? Well, now we're going to have, John says we're going to go broke. Yes, eventually, yeah. We're going to give ourselves way too much risk for the trade. We will give ourselves enough breathing room, but we're going to take on too much risk, unnecessary risk. I like that word. Yeah, that's a good term, James. So the art of the stop loss is really finding that mesh point where we're safe enough to let the market do what it do, but we also are at a level where, hey, we know we're wrong. So one of the problems I see with these overlapping structures, right? You'll see traders that have really small stop losses. And there's nothing wrong with really small stop losses, but they'll have a stop loss right in this level. They'll take a trade right here and they'll have a stop loss right in this level. And the problem is that when you have this overlapping level of structure, in my experience, in my live experience of donating money to the market for educational reasons, that's my professional way of saying taking losses, right? Back when I was learning how to trade, I was on, you guys ever heard of Tony Robbins? Back when I was learning how to trade, I was in a very dark, like, mental place because I sucked, right? I sucked. I quit all my jobs and put everything on the line, and I thought I was going to be good, and I wasn't. So I was in this really dark place, like, man, I just made the biggest mistake of my life. I'm going to go back to cleaning toilets. And funny enough, I was telling my wife yesterday, we got basically a big clog in our toilet. Not to give you too much information, but like, I'm trying to help my wife unclog it. I'm like, man, I thought I learned how to trade to avoid these reasons. Then you have kids, and the cycle repeats itself. I'm like, man, I thought I got out of this life. But I was in a very negative place. So my trading coach, big on trading psychology, big on like mental stuff. He forwarded me to some Tony Robbins materials, and I started doing the whole affirmation thing. I started doing the whole positive thinking. So I tried to. I was really I don't want to say a negative person in real life, but I was always pessimistic. Like I was always like, hey, the worst is going to happen type of person. So I worked really hard on changing that mindset. So one of the things that I want to do is I want to take a negative and state it in a positive way. So instead of just taking losses in the market, like, because I was taking a lot of losses, I started rephrasing it as saying, hey, these aren't losses, or these aren't just losses. These are donations for education, because I would try to learn from each loss. So it would be like paying for a course, right? So that's how I phrased it. But if there's one thing I learned making these donations for further education, it's that when you have overlapping levels of structure, the market likes to test that highest level. Why? Because it knows stop losses are, well, there's all liquidity thing and supply demand stuff as well. But the market knows that a lot of traders have cute stop losses and it wants to grab them. So you want to give yourself enough room. George said, did I walk on fire? No, I wasn't falling nice. Talk about trading in general. Whenever we make a prediction, we're not saying, hey, put an order there right now and trade it. I always like to say we want to be predictive in our analysis, reactive in our execution. So we want to predict where the turnaround point may be, but we want to wait until the market gives us a signal, right, that shifts the probabilities in our favor, right, that fits our edge to actually take action. So keep an eye on dollar Swiss, excuse me, as we come up to this previous level of structure. You can see our VS1 level starts at 98.50s. And again, our higher one looking left is about 98.84s. If you have the option, you probably want to try and get above the 99 even handle. Just because of that psychological level, you may or may not be able to get there, but that's a good level to look for. Targets, we can't, well, we can do structure-based targets. We can't draw any fibs in yet because we haven't gotten our turnaround. But target levels, where are you guys thinking at for targets here? There's a few different levels that stand out for me. As always, I want to see what you guys think first. YouTube, I'm seeing the spinning wheel of death, so I apologize if there's an issue. It happens every once in a while when I stream from TradingView. Real quick, while you guys are talking about targets, Iman says, could it also be the case that if your stops and targets are too far from your entry, then the trade has too much room to trade within this range and possibly keep you out of other opportunities? Ooh, opportunity costs. That's a good question. Let's save that. I wanna finish up this so I can shut the live stream off so it's not a 3-hour video for the YouTube, and then let's talk about opportunity costs or opportunity costs later, because that could be somewhat of a complex question, and I got some other lessons on that as well. So we'll save that till we're done here. But George says 96.80s. Let's start throwing some lines in there. 96.80s coming right down. Of course, we're just looking at ranges right down to this inside level of structure right here. We got 98.50s, so a little, or sorry, 98.50s, 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 96.50s. Am I reading that wrong? 98.50s, not 98.50s. That we can't have targets above. Well, I guess we can't. Yeah, is that a typo? 98.50s for targets. Or she says 97.70s. 97.70s. Is that inside structure here, Orsi? You're looking at? Yep. So we got an inside structure level here, a little pregnant pause right there. We've got previous structure shelf right here. Again, we can't bring fibs on yet because we don't know the turnaround point, but this is a good one where you'll be able to get some Fibonacci influence. We talked about this yesterday. This is a good example. We spoke about using it for entries. Here's an example of using it for targets. We could bring in our volume profile. Swing high to swing low. Let's see if there's a high volume level in here we need to pay attention to, right? You can see we have the biggest spike up here, right? No coincidence. This is right with our VS1 level. This is where we're looking for our reversal at, or our potential hold in reversal. We've got another little bit of a down period and a bigger spike right here, right in Orsi's level. So again, this is complementing your analysis, Orsi, right? And this is how I like to use this tool. I like to draw. I like to identify structure first. And then this kind of tells me, hey, you're looking in the right area, right? I think about it like this. I play this game with my kids called Hot and Cold, where I hide stuff. We've all done this as kids, I think. Yeah, I hide stuff around the house, and I'm like, getting hotter, getting colder, warm, right? This is one of those things where Orsi's saying, hey, I like this level. And then this is saying, ooh, getting hotter, getting warmer. So good spot there. We've got this interesting spike right here, which I actually don't know why this is here. Well, actually, I know I do, right? We look at this level. This is where we had kind of this rejection. I thought it would be higher, to be honest with you. But this is where we kind of had the rejection. We came down before spiking back up. And then this is what surprised me, George. I guess we have it at the top of it. Like, I thought our highest volume level would be where you identified it at, right? This structure shelf, which isn't actually there. But I assume that. But again, this is one of those things that we've been testing during the year. Maybe this gives us a clue where it's like, hey, instead of getting right here at 96.80s, either we can shoot for a little bit more at the lows, if you're a little bit more risky, maybe 96.20s, because this is where we get our big spike at. Or if you're conservative, maybe I move a little bit above that level right here. And it gives us that little bit of clue, which hopefully gives us a little bit more precision with our target taking. And that's, again, the power of, don't underestimate the power of turning one winner into one loser, or avoiding one loser or gaining one extra winner. It is massively powerful. I've been showing that a little bit in those day trading shorts I've been doing, just by managing risk. I think I did 3 videos. I did 2 losses, 1 win, but on both of those losses, I was able to manage my stop. I basically kept myself out of another loss just by doing that. So that's interesting. So yeah, good levels right there. So again, keep an eye on this. Drop down to an hourly chart as well. Again, not much is happening here. We need to kind of keep going up. We haven't done that yet, but a nice structure-based trade here on the dollar Swiss. Any questions? We're going to get into the opportunity cost question. But any questions about this particular trade or analysis? Again, it looks like YouTube came back. There was a little bit of delay. Hopefully, it's not that bad on the recorded version of it. All right. Live streamers, YouTube, TradingView, thank you guys for joining. I'm booting you out. I will see you maybe this weekend with a Trading Edge video. I got a busy weekend on the road again. If not, we'll see you back here at the live stream every Tuesday, Wednesday, and Thursday, 7:30 New York time. Enjoy your weekend. Let's talk about